Hello guys, welcome to i-tutor Academy. In today's session, we will start with Unit 13, Subsection 6 of MMPC-003. That is foreign aid. Any kind of assistance that a country voluntarily transfers to another country in the form of a gift, grant or loan is known as foreign aid. It is usually offered by the developed nation to the developing or least developed nation during the time of a natural calamity, economic crisis, or during political instability. And what are the type of foreign aid? Foreign direct investment, FDI, we already discussed the FDI. Foreign aid can be in the form of several development tools which are being funded by the government agencies or foreign non-profit organization to tackle problem associated with the poverty. And engaging in foreign trade is a third primary type of foreign aid, where a country's openness to foreign trade may lead to development process, especially among the least developed or poorer countries, along with the political stability and economic freedom. Bilateral aid, military aid, multilateral aid, and humanitarian assistance. These all are the type of foreign aids. Okay, explanation you can go through your Ignou study material, and in between any doubt you can contact us also. And the next is trade financing. Financing is an important part of trading goods and services abroad. The exporters may require financing while buying or manufacturing of goods, whereas importers may require the same for the purpose of inventory, investment, or procuring goods and services from foreign land. There are 5 principal means of trade financing which are being ranked in terms of its increasing risk to its exporters. One is cash in advance, documentary credit or documentary letter or credit is a form of letter which is addressed to the seller or exporter, written as a signed by a bank acting on behalf of the buyer or importer. The major type of a documentary credit that are prevalent include revocable, that is DC, irrevocable, and confirmed and unconfirmed DC, etc. And draft is there. Draft are commonly used means of financing in international trade. And side draft is there, time draft is there, draft also divided in many type, and clean draft, documentary draft, etc. And consignment, under a consignment, goods sent are only shipped but are not sold to the importer. Open account is there. Bank and trade financing. Banks are usually involved for providing loans or a documentary credit when it comes to financing international trade, and however, as financing became a fundamental aspect of trading, the bank, especially the international bank, have started evolving as well. And the next is American Depository Receipt, that is ADRs, a negotiable certificate which is being issued by the US bank and represent as a specified number of share of non-US company which is being traded as on a US exchange is termed as an American Depository Receipt. They are measured in US dollars and are transacted in the US stock market similar to stocks of any other US company, and are issued in US by as US bank. And ADRs are listed in either New York Stock Exchange or the American Stock Exchange or the National Associate for Security Dealers Automated Quotations. And ADRs can be sponsored ADRs are there, non-sponsored ADRs are there. There are 3 type of ADRs: level 1 ADR, level 2 ADR, and level 3 ADR. These level 1 ADRs are does not intended to raise capital, and level 2 ADRs are either listed on an exchange or quoted on NASDAQ. And the level 3, the most important category of ADRs which are issued to raise money and trade in the US exchange market. In case of the sponsored ADRs, a fee is charged by the US depository bank while making an agreement with the foreign company for rendering its services to the ADR holders. And global depository receipts are there, that is GDRS, a bank certificate which is issued in more than one country for shares in a foreign company is termed as a global depository receipt. They are listed in 2 or more markets, mainly the US and the Euro market are denominated in a freely convertible foreign currency. A foreign company issues shares to a depository bank of the shared trading country The depository bank then issues GDRs against these shares to the investors of the other foreign countries. And trends in India's global sources of financing. Indian domestic market have been sluggish when it comes to raising of fund for their business needs. As a result, Indian companies have shifted their focus towards international fundraising sources through several traditional and non-traditional channels available, some of which are mentioned as below. Equity based channels are there. They may be in the form of foreign direct investment policy, investment funds, partnership with the foreign companies through joint ventures, listing of Indian companies in stock market, equity guaranteed debt, and next is debt based instruments are there. Include major banks and other financial institutions as primary choice of raising debt fund from foreign sources. Quite a handful of commercial banks in major economies like US, Japan, China, UK, Switzerland, Canada and Taiwan provide funds to India business for financing their business needs. And smaller banks and debt funds are mostly accessible to the MSME sectors for providing loans and funds with an interest rate higher than the larger institutions but lower than the domestic funders. And next is besides business development funding, there are certain European banks that are willing to finance global business of their client by providing debt at economical rate in emerging economies like India, as long as the foreign partner company is a part of the business. And this is about today this chapter, unit 13. And summary is there of this chapter is global trading is an essential factor for determining a country's economic growth prospect, but it is also come with some cost involved during purchase and sale of merchandise across geographical boundaries, such as cost associated with the shipment of goods, payment to exporters, etc. And countries can now opt for their sources of funding as required without involving much of the depletion of its foreign stock of reserves. And keywords are there. If you feel any words are tough, you can refer this session. And self-assessment questions also there. Let's see the questions. State the difference between foreign direct investment and portfolio investment. We already discussed. What are the advantages and disadvantages of external commercial borrowing? And what are the components of international money market? Explain in detail. What is foreign aid? State the type of foreign aid. What are the American depository receipt, that is ADRs, and global depository receipt, GDRs? Explain. State and explain the 5 principal means of trade financing. And what are the various type of documentary credits? Explain their purpose. And what are the 5 major trends that India's financial account is witnessing in the recent time? Elaborate. Okay, so try to answer this question. It will help you to get good mark in your final term and examination, and also try to answer your assignment questions also before your exam. In between any doubts, you can contact our contact number, and for more videos you can like, share and subscribe our channel. Thank you for your support.
i-tutor ES presents Ignou MBA, complete syllabus coverage classes and individual semester base, subject coverage program for MBA students, online and flexible sessions. For more details, contact 62382 17885.